The global gold demand in 2013 has declined by 15% to 3,756 tons compared to 2012, mainly due to large-scale outflows from electronic traded funds to the equity markets. According to the World Gold Council report, China and India both have recorded increased demand in 2013, while the consumer demand in China rose 32% to a record of 1,066. In India, the demand rose by 13% to 975 tons. Let's bring on board then World Gold Council, Somasundaram PR and Scotiabank's Sunil Kashyap and also Vijay Bambani, who joins us in the studios here. Somhai, let's start with you first. And what is your view on the demand in India in 2013, the kind of run-up that we have seen, especially after the policy curves, and what are you forecasting for 2014 now?
Consumer demand across the globe has grown by 21%. India has grown by 13%, China 32%. So it's been very positive from the retail angle, where people have reinforced their faith in gold, bars and coins and jewellery. So we believe that there are enough factors that will contribute to this demand continuing into 2014. And I think the factors on gold demand are very, very positive for 2014 as well.
Vijay, what's your sense on the demand side? Because while we have seen those policies curbing much of imports into the Indian markets, the spot premiums have been on the higher side as well. But given that, there have been some support come back into the prices.
Good evening, Manisha. Now, gold does remain as a safe haven, and whenever you see any kind of volatility or excessive volatility, what is typically known as pro-cyclicality, you will see a flight to safety and therefore a safer haven buying, which you have seen in the last couple of trading sessions in gold. I think 2014 promises to be a higher volatility year in asset classes, and whenever there is a higher volatility, risk aversion normally steps up also. Let's not forget this year also marks the beginning of tapering of the quantitative easing, and therefore premium on asset prices is likely to compress, and therefore there is a higher probability, I use the word probability here, of greater inflows into gold. So I think the downsides will be capped, and the upside potential of gold might just go up to 34,000 on the MCX for the calendar year.
Well, there has been good demand all around, as you can see on those figures on your screens there. But Sunil, coming to you now, the World Gold Council has said that the Indian imports in 2013 have been more or less the same as 2012, with more numbers, of course, seem to be coming in from the grey market. What's your view?
That's correct. I mean, that's what, anecdotally, if you talk to people in the market, the actual demand for jewellery on the ground through the retailers seems to be around the same levels as the previous year. I mean, it's 2013 versus 2012. Some people have said that maybe demand was down about 5 or 10%, whereas others, especially in the smaller towns, are seeing demand up by 5 or 10%. So on the whole, the market was flat, and yes, if you look at the import numbers are dramatically lower, maybe about 50-60% lower. So one has to assume that the gold demand is being met by imports from other ways.
Unofficial ways, as you would call it, Sunil. But Som, this one is to you. And the import duty, what is the impact that you have seen on the industry from that? And markets do not expect any change on that ahead of elections now. So how do you see it panning out?
Well, we have seen that in the second half, the curbs have had their impact on the grey market, and we believe this will continue to 2014. But this is not only due to the import duties, it's also the primary reason is the 80-20 rule, which has actually curtailed the official supplies of gold. As for the relaxations, we have had enough pointers from every senior policy maker that this will be reviewed. Whether it happens before or after is something we have to wait and see. But I think when the FM says we will review the curbs, I believe that it will lead to the a good decision before the elections.
Fair point. Similar question to you as well, Sunil. The gold duty at 10% in sense of imports. Do you think, especially the prices also after that have gained quite a bit now. Do you think bears now would have it difficult to hold too long as we see net longs increasing as far as the gold prices go?
The recent pullback in the gold prices upwards is more to do with the fact that I think there was some short covering, there was some people coming in and doing some bottom fishing. So this is more of a recovery phase rather than a huge bullish phase for gold. And I think that's what we need to look at for this year. It's going to be more recovering and more stabilizing around the 1350 levels.
So I'm coming back to you. While China has been buying, the other world central banks really have been on a pause mode. How do you see that going forward?
Well, central banks for 12 consecutive quarters have been net buyers. Even in the December quarter, they were net buyers, although the total buying of 369 tons has been below the last year by 32%. But it is important that to note that they have been net buyers, and we believe this will continue into 2014. We must look at the central bank buying in the context of the central bank's gold agreement as well, which is coming into expiry in September 2014.
Sunil, what is your sense when it comes to the physical buying from China? And US mints also show some increase in selling there, though the funds are yet to start accumulating on the commodity. How do you see the dynamics, and what range would you see in the gold prices now?
Well, China is an incredible story. You know, you've seen demand for gold in China go up almost fourfold in about 6 years, and it's well exceeded India right now. So China remains a strong story. I don't think the growth is going to be that much, but China is going to be robust. China demand is going to be robust this year. I must say that, you know, in the last few days we are seeing some pickup of demand from hedge funds, from investment funds, and so if you see the ETF in the US, you can see a build-up of stocks in the ETF. So that's certainly bullish in terms of this particular area of demand.
So while the price has been quite on the higher side, as Sunil was pointing out, it perhaps is a correction right now. And would you say that since the producers, the organized trade is yet to go long on the commodity, that is what perhaps the markets are missing right now?
Yes, it certainly, industry, particularly the organized trade, will be benefited if we have the banks coming into this in a big way. But yes, the current scenario is that the formal sector is keeping away from this and is still treating this with tentativeness, which is not good.
So you've come out with the global report today as well. What is the impact that the Indian policy has had on the international sentiments?
Well, as you are aware, when we heard in the international press about the letter written by Mrs. Gandhi to the Commerce Minister and Finance Minister saying that we should review the controls on gold, the prices internationally reacted very favorably. So India has a huge impact on the international market. Perhaps, we are not leveraging our strength as a major consumer of gold, and perhaps we will see that as a big trend in the years to come.
Fair point. So also, how have you read the record high spot premiums that we have worked with in the last couple of quarters? Of course, now the prices seem to have corrected. We also seem to have come down in sense of premiums.
Merely tinkering with the import duty without addressing the larger issue of supply may not really be very effective, because there is a spot premium on top of the duty that is being paid by the market for official supplies now. So it is not just a question of duty, it is also a question of the 80-20 rule affecting the supplies. So we do believe that the spot premiums will keep going up. And even if the duty is cut without addressing the 80-20 rule, it will only lead to higher spot premiums.
Vijay, what is your sense? I mean, listening to both of them, there have been major concerns. There is smuggling happening. The government has turned, I don't know, a blind eye to it or whatever. There has been no change in policies. How are you reading the fundamentals?
Manisha, this factor of course remains, but I would like to draw your attention to a little known factor here, which is of the international shorts in the gold market. Now, the biggest short sellers in gold, rather than calling it short sales, I would call it hedge. A hedge trade by the gold mining companies, which lock in their prices, so to say, and avoid volatility in earnings. Now, my guess is a lot of these mining companies which are nursing shorts to lock in their prices will be on the tenterhooks if especially gold prices were to rise 2.5–3% from here. There would be some amount of short covering. Now, if this short covering was to get triggered, the quantum of short covering itself would be magnanimous, and that could basically push gold prices into an upward spiral. So in the coming few weeks, I would look out for short covering by the gold mining companies, which will have a typical trading pattern on the international commodity markets. The ticket sizes per trade will jump up by leaps and bounds. Traded volumes and open interest changes, as is declared in the commitment of traders reports, will start to show a different color altogether. And at that point in time, I think short sellers nursing short positions will be akin to standing in front of a speeding train. It could actually be an overheated kind of a situation. It's not likely to last too long, but volatility in that case will jump up by leaps and bounds.
Well, a fair point really, because there have been net shorts, and that is a figure to watch out for in the international markets as well. Sunil, though, the silver also has put in a longest rally since March 2008 for this current year. If you had to buy, would you rather buy silver than gold?
Silver is an interesting metal. You know, silver is an industrial metal. It doesn't see the same kind of investment demand as gold does, and silver is very much driven by economic conditions. You're right, silver prices have come off tremendously and then have recovered a little bit, but most people in the industry feel that with the economic recovery in the West and probably Japan also seeing some growth, we should see demand for silver go up, especially industrial demand go up, and that should be more bullish for silver prices compared to gold.
Fair point. So I understand that World Gold Council doesn't give a forecast on prices going forward, but bullish or bearish, I'm sure you can say that much. And what is your long-term trend view now?
Looking at all that is happening around in the globe and in India in particular, I don't think as a gold consumer I would worry about the short-term price. I certainly would think that gold will always help us in the long term. As a gold consumer, that's what I would think, and that's perhaps my opinion.
One final word with Vijay as well. Now, Vijay, what's your sense? Gold and silver, which one would you choose, and what kind of a return are you expecting from 2014?
As far as I'm concerned, Manisha, it's a no-brainer. I would be positively biased towards silver, because the gold-silver ratio is talking about an excessive exuberance in gold and undue pessimism in silver. If you are looking at even the aspect of the solar energy factor, I think the capacity addition in solar energy itself in 2014, 2050, take a look at China, take a look at India, the way they are focusing on solar energy, the way China is talking about bringing down the cost to under 75 cents to a unit, there has to be a minimum of 30-time increase in solar energy capacity in the coming 3 to 5 years alone. So by that logic itself, I think silver has a huge amount of an upside in relative terms as compared to gold. I'm over a period of time, say 3 to 5 years time frame, if not shorter, expecting a retest and a surpass of that 73,000 levels on silver, which you saw in April, May 2011. So the percentage return in silver are significantly higher as compared to gold over the next 3 to 5 years.
As per the latest ESMA release today, the total sugar production up to 15th Feb 2014 is 143.7 lakh tons. It was 165.88 during the last year same time. The gap in sugar production over the last year during same corresponding period has narrowed down to 13% from about 16% a fortnight ago. Vijay, what's your sense now on sugar? Because while the figures seem improving, the prices still are on the consolidation mode.
I would agree, Manisha. And in the last couple of trading sessions, you have seen sugar prices firming up. Take for example, yesterday's spurt in price. Now, yesterday's spurt was accompanied by a goodish kind of volume. So that leads me to believe that the 26.25 to 26.50 levels on the NCDX sugar futures is now established as a swing low support. I don't expect this support to get violated. It sure enough may be retested, but at that level it would attract buying interest. At least I would go out there and buy more sugar. I would still maintain my view that the prices of sugar have been unduly subdued. And once you see the summer coming upon us, sugar prices should be above 3,000 levels, if not 3,075. That's a projection that I would still maintain.